Hey guys, it is Julie here with JT Wealth. In today's video, we are going to take a look at 3 stocks that analysts at RBC believe could grow over 30%. So let's get into it. Alright guys, welcome back and thank you so much for being here. Like I said, today we are looking at 3 stocks that are poised to surge by at least 30%, according to analysts over at the Royal Bank of Canada. And I'll give you a little teaser here. They think one of them could actually grow over 100%. So in today's video, we're going to take a look at these 3 companies, what exactly they do, and what analysts are predicting for their future. Just before we jump into those, this is just your friendly reminder that if you enjoyed today's video, make sure you give us a big thumbs up and leave your thoughts in the comments down below. Also, if you enjoy free stocks, Webull is giving away 4 free stocks right now for opening up and funding a new investment account. So check out the link to them in our description down below. So the 3 companies that we are taking a look at today are Media Alpha, Docusign, and Global Blood Therapeutics. And we're going to start off with Media Alpha. They trade under the ticker MAX, M-A-X. Now these guys just recently IPO'd on October 28th. They came out at $25 per share and are now up about 39%, sitting at $34.79 per share. Media Alpha is an advertising technology company that provides customer acquisition solutions designed to reach consumers shopping within high consideration categories, such as property and casualty insurance, health and life insurance, personal finance, travel, education, and more. Partnered with some fairly recognizable names in those industries like Nationwide, Progressive, Allstate, State Farm, and Expedia. And last week, they released their first quarterly report as a publicly traded company. The results were encouraging. Transaction value, which is a key measure of the quantity of business that Max does, grew 44% year over year to reach $271.6 million. Revenues hit $151.5 million, up 37% year over year, and the company revised its full year revenue guidance to $558 to $560 million, up 37% from last year's results. A strong performance from the company's property and casualty vertical led these gains, as that segment revenue grew 73% from the year-ago quarter. RBC's 5-star analyst Frank Morgan was impressed with these results, saying there was impressive growth in transaction value, especially within existing partnerships, reinforcing the enormity of the growth opportunity we see for digital lead generation across Media Alpha's insurance verticals. The 5-star analyst goes on to outline the solid prospects for the company's future repetition of these quarterly gains, writing, "As demand for digital distribution grows, so does the demand for high-quality consumer referrals and the ability to match high-intent customers with carriers and distributors selling insurance products that meet consumer-specific needs. This is precisely where Media Alpha's proprietary technology platform is focused." To this end, he gives the Max stock a buy rating with a $50 price target, suggesting room for an upside potential of about 45% in the year ahead. Now, for a fairly newly public company, Max stock does have 6 analyst ratings, and it comes in split at a moderate buy with 3 buy ratings and 3 holds. The average price target is $44.60 for just shy of a 30% upside, with a high-end target all the way up at $54. The next stock is Docusign. Now, this is a stock we actually talked about earlier in the year, as they have been a clear beneficiary of the lockdown. They trade under the ticker DOCU, D-O-C-U, and are currently at $236.92 per share, which is a gain well over 200% year to date. San Francisco-based Docusign offers users a cloud-based electronic signature service, allowing customers to sign documents in a verified, secure manner online. They even offer remote online notarization via video conference. The savings for customers come in the form of efficiency, faster turnaround of important documents, less time wasted printing and distributing hard copies, and far less ink and paper used and wasted. I can speak from firsthand experience, as when I worked at a large bank, we switched to the Docusign system a few years ago, and it was a game changer as far as being able to gather clients' signatures electronically. Docusign is utilized by some pretty massive brands, including T-Mobile, Netflix, Intuit, Samsung, BMW, the list goes on and on here. And that customer base is growing at a pretty substantial rate, with a 41% compound annual growth rate on total customers and a 52% compound annual growth rate on enterprise and commercial customers. That Docusign's niche is valuable is clear from the company's 2020 performance. In a year when markets saw the sharpest, steepest recessionary movement in history, Docusign has seen steady growth in quarterly revenues and share price. At the top line, revenues hit $383 million in the recently reported fiscal Q3. This was up 53% year over year and was powered by a 54% year over year gain in subscription revenue. The company finished the quarter with over $675 million in cash and cash equivalents available. Analyzing Docusign is RBC analyst Alex Zukin, who, by the way, is not only a 5-star analyst, but is rated number 6 out of 7,100 of TipRank's analysts. Zukin notes that Docu's success and the reasons for it was largely related to core e-signature deals and was seen across geos and verticals. The analyst doesn't stop there. He goes on to say that Docusign's success comes from finding and exploiting a need that most companies didn't realize they had. He writes, "We see a company with a large, sustainable leadership position in a newer, underpenetrated total addressable market capable of sustaining durable growth. We believe both the e-signature and broader system of agreement provide one of the most tangible value propositions in an organization's digital transformation journey." In line with his comments, he rates the Docu stock a buy with a $325 price target, implying a 37% potential upside for the year ahead. And of course, Zukin is not the only analyst with an outlook on the Docu stock. There are 13 altogether with current ratings. And the stock comes in as a strong buy, with 10 buy ratings and 3 holds. The average price target comes in just shy of $275 per share, representing about a 16% potential upside. Last up today is Global Blood Therapeutics. And yes, if you've been keeping track, this is the one that analysts believe has triple-digit upside potential. It trades under the ticker GBT, currently at $42.82 per share. Global Blood Therapeutics is a clinical stage biopharma company focused on developing treatments for sickle cell disease. Sickle cell is a genetically linked hereditary blood disorder most commonly found among sub-Saharan African populations. GBT has an active pipeline of drugs in development or clinical testing, and one, voxelotor, has been approved for patients age 12 and older. In November, a tablet form of voxelotor called Oxbryta was granted accelerated approval by the FDA. The move means that GBT is now free to mass produce, market, and distribute the medication. According to the FDA, the potential patient base in the US alone is 100,000 strong. The company is still seeking approval for use of Oxbryta in children ages 4 to 11. Among the bulls for GBT is RBC analyst Gregory Renza, who writes, "We see Oxbryta as a first-in-class sickle hemoglobin polymerization inhibitor with potential to become a standard of care in sickle cell disease. We believe the value of GBT lies in the long-term potential of Oxbryta, with upside opportunity from entrenchment, expansion efforts, and complementary pipeline assets." He rates GBT and Outperform along with a $75 price target, and that gives about a 76% potential upside. But there are 13 other analysts with ratings on GBT stock, and they are a little bit more optimistic. It comes in at a moderate buy with 10 buy ratings and 4 holds. Now the average price target is $90.58, so higher than Renza's $75 target, and that potential upside is about 111%. The highest target on there is up at $152. So some pretty significant upside there. So there are our 3 companies highlighted by RBC analysts. I always love seeing what these analysts are looking at, especially the well-respected ones, as you know that these guys are doing some serious due diligence on these companies. On that note, I would love to hear your thoughts on these 3 companies. Were any already on your radar, and what do you think of their picks? As always, these videos are never a suggestion to buy or sell any specific stock, and any trade should be made after your own due diligence and research. If you made it all the way to the end of today's video, make sure you give us a big thumbs up and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and cheers.